First, do you have a pair that you are comfortable with trading? Have you tested that pair? Have you done demo testing, back testing with simulation, whichever one you want, on MT4 or Tradingview? Do you have a clear strategy or a style of trading that you understand? Do you know how to put your stop loss, how to put your take profit? Do you know if you are going for 1 to 3, 1 to 2 risks to reward, or you are going for 1 to 5? Now let's start with the first one. How to place a trade. Before you place a trade, the first thing you want to find out is what pair are you going to trade. And one thing skillful and successful traders do is that they are skilled, but they don't use all pairs. They just have 1 or 2 pair, or they just have a style of trading that they understand. So let's say, for example, you are trading Euro USD alone for a year. That is going to be your pair. The first thing when you go to Euro USD is to ask yourself, what is the direction of this market? Like you have been watching my video, you see that the market moves in 3 phases. You have a push and an exhaustion phase. Usually called the push phase is the market is making uptrends, making higher low, higher highs, or is a push trend for a downtrend, making lower highs and lower lows, or is an exhaustion phase, that is, it is consolidating, the market is moving sideways, the market is ranging. Whichever time frame you use, you can see all these phases in the market. Now you need to just be clear, what is your pair? What time frame will you be skilled at? Don't use all time frames. All time frames are just a reflection of the monthly time frame. So just narrow your overall trading idea to 2 time frames. 1 time frame for your overall direction and 1 time frame for your entry, or you can even use 1 time frame for everything. Once you're clear on your time frame, I will say, for example, the 4 hours time frame, you need to ask yourself, what is the direction of the market in the 4 hours time frame? If the market, just like Euro USD, is going down, making lower highs and lower lows, you need to mark the lower high. That is the first thing you need to do to be a successful trader. Mark the current lower high. That is also called a key level. It is a price point where lots of people, lots of traders around the world are also watching. It's also called psychological area or level, where people also are placing orders for what? The market to continue selling because it's going down. It's a downtrend. Now, how do you find a lower high? The best way to find a lower high is to look for clusters of candlesticks. So you see 4 hours candles. What you want to do is to look for at least 2 4 hours candle that it has what? Been in a price point for a while. If you see 3-4 candles that has been in a price point for a long time, like a cluster, they are just together at a point, mark that area. That is a lower high. Now you want to see that the market makes a lower low. When you have a lower low, that is what we call the push phase. So the market exhausts, that means it will cluster, consolidate at a place, then now push. That will make that what? Lower low. Do not take trades at the lower low. If you miss a trade at the lower high, wait for price to what? Come back to that same lower high to make a double top, or you want price to make a new lower high. And like I said, to find a lower high, look for an area in the market where a lot of candles have clustered together. So this is the 4 hours time frame. A lot of candles have clustered together, and what? Mark that area. That is where you'll be taking your trade from. The next thing is, where or how do I put my stop loss? To put your stop loss using Tradingview, you want to put your stop loss above the level that has been marked. So you want to put your stop loss above the current level, and you want to account for the wicks. So those shadows, those small thin lines, those shadows in the 4 hours candle, put your stop loss above it. Accommodate your broker spread so that you don't put tight stop loss. Don't over put your stop loss because you're afraid of being stopped out. Also understand that you are not thinking about the stop loss, but you're thinking about your risk to reward. So have a good stop loss, accommodate the broker spread. And for your take profit, since you are selling, your take profit will be below the entry point, and you should be going for 1 to 3. So that means if you are risking 1%, you should be going for 3%. At least go for 2%. You do not want to be taking profit just because your trade shows blue, or you're seeing that market is moving in your favor. You're happy. Allow the trade to play out to reach your 1 to 2 to your TP or to your take profit. That is how you understand how trading works, by allowing trades to play out. Now let's go back to taking TP, or how to take TP. So if you are using a downtrend, Euro USD for example, you want your take profit to be below your entry position. That is for take profit. And like we said, if you are risking 1%, you should go for 3%. Now how do you calculate your risks? Now if you understand the concept of pips, you just need to know that for your Tradingview, these tools are already there to help you to understand the exact point of your pips. But if you're using your MT4, you need to now use a way to calculate it. If you look at the screen, it shows that all you need to do is to drag this item to this point, knowing exactly where do I want to put my stop loss. If you put your stop loss at this point, then you know that, okay, how many pips is this? The easiest way to do this is to just use Tradingview. Tradingview just gives you the exact area for your TP. And what you want to do after getting your pips on Tradingview is just go to this website, position size calculator. Once you go to position size calculator, put in the pair, put in the risks that you want to risk for that pair, put in your pips, and to calculate the lot size and show you exactly how much you are risking. And I'm sure if you continue in this way, being disciplined, being patient, and learning gradually, you become consistent in the long run.